Hello, folks. I'm a precious metals bull, and so you might wonder why we're looking at the US dollar. Well, gold has two headwinds that it deals with all the time. It's the US dollar and its interest rates. And unfortunately, right now, the US dollar is extremely strong and interest rates are rising relentlessly. And so both of the headwinds against the US dollar are currently blowing in full force. Tonight we're going to focus on the US dollar and the other global currencies. And so for people that don't understand, never really looked at the currencies, I want to set context. So the US dollar index is a basket of trade-weighted currencies. DX is one of the indexes for the US dollar. Here's the content of the basket of currencies that make up the US dollar index. And you can see this is the trade weighting, and obviously the euro dominates the basket, yen, pound, etc. You can see it here. And so that basket of currencies is what makes up the dollar index. And so when we look at a chart of the dollar, that's what we're looking at, is really we're looking at a chart showing us how this basket of currencies is performing. Now, when we drop down to the individual currencies, we talk about currency pairs because, how do you value something that's worth nothing? Fiat currencies are worth nothing. They're not backed by anything. They're pieces of paper that roll off the printing press. Costs almost nothing to print paper, and yet that's what we use for currencies. And so it's like, how do you measure something that's not worth anything against something else that's not worth anything? And so it's like here, it's like, okay, this wadded up candy bar wrapper is equal to 3 rotten banana peels. And unfortunately, we have arrived at the point where all of the currencies basically worth zero. The US dollar, it started at 100 back in 1913. It's currently down at about 3.4 pennies. So that single dollar bill in 1913 is now worth 3.4 pennies. And that's true of all of the fiat currencies on planet Earth. Unfortunately, the way the globalists play, when they have failed at their fiat currency games, the next play in their book is global conflict. And so I hate to be melodramatic, pessimistic, but that's my take on the world. The global economies are collapsing, and we can see it in the currencies. Let's look at charts. I'm good at charts, maybe not so good at geopolitics, and I'm worked up today. Looking at these charts really got me worked up. So here we've got the US dollar in the monthly time frame, just relentless strength in the US dollar. We can see that we got this double top. And so, you might think, okay, double top, it's time for a correction. Well, what we're getting is, you could call this a high consolidation or a sideways trading range. Basically, my take on this is the dollar gathering energy before it makes its next push higher. In the monthly time frame, that moving average is not relevant, We can see here in MACD, it's in bull mode, meaning both the indicator lines are above the zero level of the indicator. That suggests that the primary trend in this time frame is to the upside. And so based on MACD, we can expect further movement to the upside. Stochastics, this is my measurement of energy, and we can see it's 87 out of 100. So anyway, energy is very high. The dollar's headed higher from here. In the weekly time frame, we can see we got this double top, got some overthrow to the upside, and then a pullback. We can see that the pullback got us to the 38% Fibonacci retracement, and now we're getting a strong bounce off of that Fibonacci support level. Again, MACD in bull mode, still on a buy signal. Stochastics or energy very elevated. So again, in the weekly time frame, the dollar is headed higher. It'll have to deal with resistance at this level again. Based on the monthly chart, I would expect that we're going to push right through that and head higher. Here we are in the daily time frame. This is what motivated me to go out and look at the basket of currencies today, is I just watching the dollar all day today, just pushing higher and higher. This morning, it was actually looking kind of weak. It doesn't look weak now. Very strong bar today. Long lower tail is bullish, obviously finding support on the 50-day moving average. This is a strong push through this support resistance level, and then also a push through resistance at, this is the second median line extension of this modified shift pitchfork. And so in MACD in bull mode, didn't get a new buy signal yet. I suspect we'll get a new MACD buy signal tomorrow in the dollar. Energy rising, very elevated and still rising sharply. So dollar's headed higher, folks. Now let's look at why. And basically, all of the currencies in the trade-weighted basket that makes up the US dollar index, they're all tanking. And so we're about to look at 6 currencies that are all headed lower. And in my opinion, the reason they're all headed lower, it's because the global economy is in collapse mode right now. Again, hate to be melodramatic, but that's my take on things. Global economy is collapsing. The US dollar is only strong relative to all of the other currencies. You know, it's the least ugly sheep in the field right now. Anyway, so here's the euro against the US dollar. And this, again, that's what I was saying a minute ago. When we look at individual currencies, they are measured relative to each other. And so this is the euro relative to the US dollar. We can see it's been in a relentless downtrend since at least May of 21. You know, lower low, lower high, lower low, lower high, lower low, so on and so forth. This is the technical definition of a downtrend, a series of lower lows and lower highs. If we zoom in a little bit, we can see if we focus on this black pitchfork, it's a modified shift pitchfork. You can see that the euro's been bumping along, finding resistance at the upper median line of that fork. And then today, so we're in the daily time frame, we got this big bearish bar, and now, you know, in the overnight session, we appear to be headed lower. MACD has rolled over. We got a new sell signal. We can tell that we got a sell signal because you can see MACD histogram. That's a red bar. And so we just got a fresh sell signal in the euro. Energy is mid-range. And so in Andrew's pitchfork, whenever price moves through one of the median lines, the next target automatically becomes the next median line in the direction the vehicle is moving. And so in this case, we've got a target at the median line of this fork, which, you know, takes us down here. Maybe we get some horizontal support in there somewhere, but I would expect to see us hitting the median line of that fork in the euro. This is the Japanese yen. It's been in a downtrend for a long time and has accelerated in recent months, as you can see here, just relentless decline lower. And of course, you know, we've got this guy saying inane stuff like this, a stable, weaker yen. I mean, that's like military intelligence. What the heck does that mean? It's an oxymoron. You don't have stable, weaker, and it's positive somehow. It's like these talking heads. I mean, who's got their hands up their tuchuses moving their mouths? That's what I want to know. And so anyway, back to the charts. We can see this is a shift pitchfork. The yen is finding support along the lower median line for now, but look at this last price bar. That upper wick on that candle suggests bearish action. I would expect that the yen is going to drop through that lower median line, and like I just said, the next target becomes the next lower median line in this case. And so MACD on a sell signal in bear mode, stochastics are very low, and so the yen is headed lower. Here's the yen. I actually was playing with this chart last night. First thing I noticed, this is the yen US dollar cross in the monthly time frame. Now the reason this looks bullish is because this is the yen relative to the US dollar. And so what we're really measuring here is strength in the dollar relative to the yen. That's why this is going up. This head and shoulders pattern suggests to me that the yen has a long way to go. Again, this is the monthly time frame. This is a very large head and shoulders pattern. The target, when you're looking at head and shoulders patterns, what you do is measure the distance from the neckline down to the, in this case, down to the bottom of the head, and then we duplicate that line, put it on top of the neckline, and we got to scrunch the chart down, and so that becomes our target. There's our next target in this time frame. Here's the target for the yen. I mean, you know, does the yen even exist at that point? And especially when you've got, you know, people like this saying silly stuff. And of course, the Japanese yen it's really the test case for fiat currencies. They've been madly printing the yen for, is it 20 years? It's at least 20 years, maybe 30 years. Long time. So, well, here, you can see it here. Yeah, at least 20 years they've been madly printing yen. Sigh. So anyway, yen's headed lower. This is the British pound relative to the US dollar. We're in the daily time frame. Pound is rolling over. We got, oh, and this is true of all of these charts in the daily time frame. The moving averages, this is called bearish alignment. So the 20-day moving average is below the 50-day, and the 50-day is below the 200-day moving average. And so we call that bearish alignment of the moving averages, which again suggests that this is a downtrend that will continue. If we zoom in on this action, we can see that the 20-day moving average is rolling over at this point. What this looks like to me is the pound is being squeezed between the upper median line of this blue modified shift fork, and this is the first median line extension of this. This is another modified shift pitchfork. It's going to lose support here, and then it's going to fall hard. That would be my expectation for the pound. Next target is the median line of this fork. We don't have a sell signal yet in MACD, but MACD is already in bear mode. I'd expect to see a sell signal here pretty quick. Energy in mid-range. This is the Canadian dollar against the US dollar. We're in the daily time frame. This was dropping as I was drawing charts today. I was watching this bar forming, and you can see the continuation in the overnight session. So we got price, or the Canadian dollar, closed at the very low of this bar today, and then that's where the overnight session opened. So very bearish looking. That's a huge, huge price bar. One of the things we can look at in technical analysis is the strength of individual price bars. And so we can call this is a wide-ranging price bar, which gives us a clue that energy is elevated. We can see it in stochastics as well. Energy is elevated, but a wide-ranging bar, in this case, it's very bearish. If it was green and headed up, it'd be bullish. Anyway, very bearish bar. We're getting followed through, at least for now. MACD is about to roll over. To expect to see a new sell signal in MACD tomorrow, maybe Monday. For now, MACD is in bull mode, suggesting that the primary trend in this time frame is upwards, but back up a little bit, and we can see that the loonie, the Canadian dollar, is in a technical downtrend. Again, high, lower, low, double top, lower low, lower high, lower low. It's like all of these currencies are headed lower. Now, I don't have a direct chart of the Swedish krona against the US dollar, so I've inverted the US dollar relative to the krona. That's technical gobbledygook, but that's why you see the 1 over. Basically, I've just flipped the chart so we can look at all of the charts in the same context. And we can see again, technical downtrend, bearish alignment of the moving averages, tested resistance at the 50-day moving average and rolled over. 20-day moving average is curling over. We've lost any support that we had at the median line of this shift pitchfork. Maybe we get some support at this horizontal level. Our price target based on Andrew's pitchforks is the lower median line of this shift fork. Looks like we've got a new sell signal in MACD, and MACD is basically at the zero line, so it's about to drop into bear mode. Energy is mid-range and declining. This is the krona versus the USD in the monthly time frame. So, maybe it's sitting on horizontal support here. That's last month's candle is bullish. We can see this big, long, lower wick on this doji. That is a bullish candlestick. So maybe we get a bounce from here. At best, I would expect to see this thing come up, test resistance at the median line, and then head back lower again. So, that's the best guess that I would make for the Swedish krona in this time frame. MACD's already in bear mode on a sell signal. Energy's in the tank. I think this is the last, yes, this is the last currency in the trade-weighted basket. It's the Swiss franc. We're in the daily time frame, and again, technical downtrend, steepening of that downtrend in recent months. This is a counter-trend rally. What is generally true of counter-trend rallies is that they're very fast and very steep. And that's exactly what we see here. That was a huge rally, counter-trend rally, tested the 50-day moving average for resistance, rolled over, 20-day moving average rolling over. It's just ugly charts, folks. All of these currencies just ugly as sin. They are ugly as sin. They're fiat currencies. They're worthless. MACD on a sell signal in bear mode. Energy is low. This is just for fun. The Turkish lira. So it's not in the trade-weighted basket. It's just another fiat currency. Turkey's in bad shape. They're dealing with a huge inflation problem, currently at 73% inflation year over year. When currencies or any vehicle, when they start moving just steep and fast, it becomes hard to do technical analysis on them because they're just moving too fast. And that's exactly what's going on here. First thing that caught my eye when I looked at this chart is this channel, this price range. And of course, price ranges can be horizontal, they can be slanted. In this case, we've got a slanted trading range or channel. Now, Dr. Timothy Morge, he taught me Andrew's pitchforks. Very talented man. Rest in peace, Dr. Morge. He had a number of advanced charting techniques. He laughingly referred to a number of them as crayon drawing. And so basically, you whip out the crayons and you start marking up the charts. And so this technique he called double the range. And so when we have a well-defined trading range on a chart, it's basically we can double that range, and oftentimes we'll find, and again, this is based on Dr. Morge's work, not my own, we find that that double range price will find resistance. It'll react at the doubling of the range. Now, in this case, we can see that the lira punched right through the doubling of the range, but then found support and bounced along that level. This is a weekly time frame that we're in, and so that's 2, 4, 6 weeks of trading where the lira found support on that doubling of the range. The doubling still didn't get us this, and so I tripled it and then I quadrupled it, and you can see just coincidentally, the quadruple of the range caught that spike top. The tripling of the range, you can see that the lira reacted at that level, tested it for resistance, spent a whole week trading at that level, and then last week we got this big breakout bar, the lira continuing to head higher. And of course, this is weakness. So we're actually measuring in this chart, we're measuring weakness of the lira relative to the US dollar. That's why this chart is heading upwards. I chose not to invert this one. MACD is on a buy signal, which of course means actually sell the lira. If you're trading currencies, sell the lira against the US dollar. Energy is elevated. But again, that's energy in the US dollar. That means the lira is weak. So the other headwind that I mentioned against the precious metals is interest rate. This is the yield on the 10-year note in the weekly time frame, and just heading higher. Interest rates are heading higher. It's true across the board. We can look anywhere from the 1-year bill, 2-year bill, 5-year bill, 10-year note, 30-year bond. All of them are heading higher. Now, I expected the Federal Reserve to step in, implement some kind of yield curve control, take control of interest rates, and they didn't. Well, the reason they didn't is because they can't. The U.S. Federal Reserve is not in control of interest rates, folks. Regardless of what the talking heads at the Fed want to tell you, they are not in control of interest rates. They are behind the curve. They're trying to play catch up. Of course, they don't really want to raise rates because the entire global economy is in such tremendous debt that higher interest rates are just going to crash, basically going to crash the global economy. And that's exactly what we're seeing right now. The global economy is tanking. And again, forgive me, folks, I'm worked up this evening, obviously. So anyway, yield in the weekly time frame is heading higher. MACD is in bull mode on a buy signal. Energy is very elevated. Interest rates headed higher. This is the yield in the daily time frame, headed higher, relentlessly higher. Let's look at one more thing. This is the 30-year mortgage rate. It's like it wasn't bad enough that stocks and bonds and currencies are tanking. Well, the real estate market is tanking too, because mortgage rates have basically doubled in the last year. I mean, I did a refi back in 2020. I 3 3/8, I think I got 30-year fixed at 3 3/8. Look at what it cost you today, 6 1/10. That's what a 30-year fixed mortgage. Well, that's absolutely devastating the real estate markets right now. That, again, that's not what the talking heads are going to tell you, because they got real estate to sell. Folks, I've ranted enough in this video. I'm going to do some editing. I'll probably clean it up some. I'm going to do another video tonight. Hopefully I'll relax a little bit before I do that one. Have a fantastic rest of your evening. Enjoy the rest of the week. Have a great weekend. See you, folks.